Hi, this is attorney Glenn Wagstaff. I wanted to just take a minute and talk with you about tax credits. If you have a farm or you have a ranch and maybe you're even receiving some of these tax credits, it's very important that when you do your planning for your taxes, that your tax professional is aware of what credits that you can qualify for. We're going to talk about 5 different credits that you might be able to be eligible for, you might be able to leverage in your tax planning. And when you do your estate planning or when you set up entities, it's very important that you make your professional that you're working with aware of what credits you are receiving, because you can actually interfere with those credits if you set things up improperly, right? So you want to make sure that you're addressing preserving those credits in whatever you set up. We live in the state of Utah, and here, we have a lot of individuals that have farms that have, significant land that qualify for greenbelt credits. And we've seen situations where they do their estate plan and then they don't take into consideration the credits that they're receiving on their land. And when they transfer it into an entity, all of a sudden they stop getting checks. We don't want that to happen, right? So when we talk about tax credits, there's 5 major types of categories of tax credits that you might be dealing with. The first one is what we call fuel tax credits. And the federal government from time to time and for specific types of businesses can allow you to be able to offset for tax purposes what you spend on fuel. That might be, diesel, it might be for your equipment, it might be for different things like that. And that's one of the things that we can explore to see if you could qualify for some of those fuel tax credits. The second type of credit that's very common, and it depends on state by state, but every state has state tax credits that you may be able to qualify for. Now, a lot of times those state tax credits have to do with your real estate and the assessment of the tax value of your real estate. And sometimes those state tax credits have to do with, the use of your business or the use of your land. In the state of Montana, for example, one of the things that's come up, fairly frequently over the last few years is the ability for certain individuals that have luxury homes on their farmland to be able to reduce the value, the assessment value for the taxes, because the land that it's sitting on is assessed as farmland rather than as residential property. Now, there's a very specific way to make sure that you're maximizing the use of that type of credit. And there are ways to be able to do that, so that's one of the things that we can assess you on. The other thing that we can look at is whatever state tax credits that the state might have for greenbelt or for using your land in particular ways or being able to leverage your business in particular ways. Aside from state tax credits, there are also credits that could be available for solar energy. If you start using solar energy credits and that sort of stuff as part of your farming operations, then that might qualify you for federal tax credits that you can also take advantage of. And again, we can do that assessment and see whether it makes sense. But one of the things that we do when we do income tax planning is we try to maximize the ways that you're going to spend your money that will help your business to be able to maximize the tax savings. Some of those credits come from what's called R&D, or research and development. And sometimes we think of R&D as cutting edge. It has to be technology, it has to be online or in the cloud. Not necessarily. It could be as simple as new farming techniques. It could be as simple as using existing equipment in new innovative ways. And if you qualify for R&D credits, whatever you're spending, not just on the labor and on the equipment, but sometimes you can even qualify for double the value of what you're spending on the research and development to offset your taxes with. So one of the secret keys of proper planning when you have a farm or when you have a ranch is making sure that not only are you trying to maximize your profit and profitability and use of the land and the resources, but also maximizing the use of your tax credits, because there's so many tax credits that you could potentially qualify for that we want to make sure that you're not missing out on those things, because every little bit helps. And if that's of interest to you and you want to do an assessment and see whether some of these tax credits that you're already receiving, that we can preserve those as you do your planning, or if you're interested in seeing if there's other tax credits that you're not considering, we can sit down and do an assessment with you, and we invite you to schedule a consultation. We'll look forward to talking to you soon.